Have you ever looked at your bank account at the end of the month and wondered where all your money actually went? Not because you bought something huge, not because of a financial emergency, but somehow, despite working full-time, earning a decent salary, and doing what everyone says you're supposed to do, there never seems to be much left. For millions of people across the United States and Europe, that's become completely normal. And that's exactly the problem. Imagine a 28-year-old office worker in Chicago. He earns $65,000 a year. Sounds reasonable. But after taxes, healthcare deductions, and other payroll expenses, his monthly take-home pay is roughly $4,000. His rent is $1,600. His car payment is $450. Insurance adds another $150. Student loan payments take $300. Utilities, internet, and phone cost around $250. Before he's even bought groceries, he's already committed more than half of his income. Then life starts happening. Coffee on the way to work, streaming subscriptions, weekend dinners, a few online purchases, maybe a vacation financed through a credit card because everyone needs a break. Nothing feels excessive. Nothing feels irresponsible. Yet month after month, the account balance never seems to grow. Most people assume the problem is income. They think they simply need a bigger salary. But often the real issue is much less obvious. It's not one large expense. It's the habit of spending every dollar that becomes available. A small raise arrives. Lifestyle expands. A bonus arrives. Lifestyle expands again. Monthly expenses quietly rise to match monthly income. Economists call this lifestyle inflation. Most people simply call it normal life. Let's do some simple math. Imagine someone spends just $12 per day on things they barely remember buying. A coffee, a snack, a delivery fee, a random online purchase. $12 doesn't sound important, but over 1 year, that's more than $4,300. Over 10 years, that's over $43,000. And that's before considering any investment growth. If that money had been invested instead and earned a modest return, the gap becomes dramatically larger. The surprising part is that most people never see these costs because they're scattered across hundreds of tiny decisions. No single purchase feels significant. The total impact only becomes visible years later. But why do intelligent people keep doing this? The answer has very little to do with intelligence. It has everything to do with psychology. Humans are naturally wired to prioritize immediate rewards. A benefit today feels real. A benefit 10 years from now feels abstract. The brain treats future consequences as someone else's problem. On top of that, modern consumer culture constantly encourages spending. Advertising doesn't sell products. It sells identities. A nicer car isn't presented as transportation. It's presented as success. A luxury apartment isn't presented as shelter.